Mortgage interest rates have reached their highest levels in just over a month, which is causing issues with regards to affordability because mortgage payments have jumped nearly 40% in just over a year. And this is causing 80% of potential home buyers out there to say buying a home right now is a terrible idea. So the housing market must be collapsing, right? No. And that's what we're going to discuss in today's video. We're going to go over the most recent data. We're going to talk about the changes that are happening in the market. There is a shift happening in the market. Part of it is seasonality, but part of it is, more homes coming to the market, people just kind of scared, wondering what's going to happen. And we're going to talk about that to help you as a buyer or seller in today's market. Now, if I look like hell while I'm filming this video, it's because I have COVID. I just came out of actually the last 4 or 5 days having COVID. It was pretty bad. I'm recovering. So if I look like hell, that's why. But I'd like to ask you to hit the thumbs up and, leave me a comment. Let me know what you think is actually happening in the market. As a buyer or a seller out there, what are you seeing happen? Because, you're one with boots on the ground. I have boots on the ground, and we'll talk about that in this video, what I'm seeing out there. But I'd love to know your thoughts. What are you seeing happening in California right now with regards to housing? Now, as I mentioned at the beginning of the video, interest rates are up near their most recent highs. In fact, they're at their highest levels in just over a month. Why? Well, there's still a lot of volatility out there in the market. In fact, we saw the latest inflation reading was actually higher than expected. And, there's some guessing, if you will, with regards to what the Fed is actually going to do this Wednesday when they meet. Are they going to raise it 50 basis points? Are they going to raise it 75 basis points? There's now, a pretty good amount of people out there thinking that the market could do a 75-point basis hike. And this would actually be a good thing. This would show the market that the Fed is serious about taming inflation. So I think if the Fed actually raised it 75 basis points, this would be better for interest rates versus a 50 basis point hike. But we don't know what the Fed is going to do. And until we have some certainty in the direction of their plan, if you will, interest rates are going to remain volatile. We're going to see them bounce up. We're going to see them bounce down. I'm personally under the belief that we're probably somewhere close to the peak in interest rates. I've mentioned that before. I've been wrong about interest rates in the past. I didn't think we would ever get this high. But now that we're here and we've seen them trade, in this trend for some period of time, I see interest rates kind of more or less staying here with some, maybe minor moves up, minor moves down, nothing significant happening in either direction until we know exactly what the Fed is going to do. Once the Fed comes out and follows through with their plan, I think over the next couple of months and inflation starts to come down, I think you'll see interest rates come down at that point. But until then, we've got this volatility playing into the market. At the same time, we're seeing inventory levels increase and buyer demand decrease because buyers, some are priced out because of affordability, some are just sitting on the sidelines waiting to see what the market's going to do. And then there's some that are out there taking summer vacations that have just taken it off. We're at that point in the year when things typically start to slow down. Now, many of you out there are thinking, no, the summer is the hot time. Well, the summer isn't the hot time. The spring market is the hot time. The summer gets the credit. But many school districts out there across the country are already out for summer, which means that the summer vacations are starting, which means that those potential buyers that have families that are traveling can't actually look for homes. And so that's what you're seeing start to play into the housing market. Not only are we seeing inventory levels increase and just the buyer demand slowing because of affordability, now you have the seasonality playing into it, which is causing the market to slow even further. And I think as we move through summer, you're going to continue to see more of that. You're going to see inventory levels continue to increase. You're going to see demand drop off. You're going to see more of this slowing effect across the board. This is where the collapse starts, right? No. I want to pull up a chart here from Bank of America where they show, a draconian 50% increase in the active number of listed properties out there, inventory, if you will, and a 35% decrease in buyer demand. Now, this is a forecast, right? If this were to happen, this is what they would expect to happen to inventory. As you can see here, we're currently at 2.2 months of supply of homes. A balanced market is 6 months, where buyers aren't in favor, sellers aren't in favor. And so, with this draconian outlook, if you will, with regards to inventory increasing 50% and demand dropping 35%, it would take us until the fourth quarter of 2023, that's a year and a half from now, to reach a 5-month supply of homes. And as you can see, that's still below the 20-year average of 5.4 months supply of homes. So even if you saw this crazy, forecast come to play where inventory levels increase substantially, buyer demand drops off, substantially, we're still well below a balanced market, if you will. We're closer to a balanced market, but we're still well below what you would consider a buyer's market. And why do I bring this up? It's because housing inventory is still the driver of the market, right? Regardless of what's happened to interest rates, regardless of what's happened with inflation or what have you, you need supply. Now, with all of that said, we are seeing inventory levels increase, and that's a good thing for the market. It gives buyers more choices. It gives, the market more balance, if you will, where buyers don't have to all bid on the same home, which is part of the problem that we had throughout the pandemic. People were bidding on the same home and going above the asking price, doing all these crazy things. And that's what caused, prices to jump so much, is because there were so few properties to choose from and so many buyers that wanted or felt like they had to have that one. Well, as inventory levels increase, you've got less of that, and you start to see more normalization in the market. I mean, last year, my prediction for this year was that maybe you'd see, a low single-digit appreciation over this year, because we had seen 2 years of crazy appreciation between 20 and 21. I didn't think you'd see, another repeat year in 2022 like you did the previous years. I didn't think it could happen again. And then we came in the first quarter, and it was absolutely bonkers, probably the craziest quarter we've seen in housing over the last couple of years. And so now that the housing market is slowing, people think, well, that's it. It's just over. Well, people have very short memories. All people remember is the last couple of months or the last couple of years when housing was absolutely bananas. And when it's not bananas, they think, well, the world's falling apart. No, it's just getting back to more normal times. Between 2017 and 2019, the 3-year average prior to the pandemic, here in my market, we would average about 6,000 homes on the market during this time of year. Well, this year we started the year at just under 1,000 homes. Well, today we've had a 200% increase in property. We sit just over 3,000 homes. And that might seem like a lot until you go back and look at the trend prior to the pandemic. And prior to the pandemic, no one was out there saying we have way too many homes on the market. No, the consensus was we still didn't have enough property at that time. Even though things were moving, it was still a seller's market. And so we're just getting back to more normal times, people. So as a buyer out there, understand that, right? You need to make sure you're working with an agent that understands the market, for one. So as a buyer out there, just make sure you understand your market. Now, there are some markets out there that are seeing big increases in the number of active homes on the market. So if you're in one of these markets, you might have a better opportunity to get a property for less than market value. And let's take a look at some of these markets here. So the number of listings actually rose 8% in May year over year. Now, a lot of it's due to new sellers coming to the market. A lot of it's due to, the slowdown in affordability, seasonality changes, as I mentioned earlier. But let's talk about what this actually looks like. Now, if you go outside of California, Austin, Phoenix saw the biggest increases in the number of homes. But here in the state of California, Sacramento, 55% increase in active listings. So if you're in the Sacramento market, and you're looking for property, there's probably more options to choose from. Now, does this mean you can go in and offer substantially less for a property? I don't know. I'm not familiar with Sacramento enough to tell you, but I could tell you about my market, which I will here in just a minute. But let's take a look at what's actually happening. So in Sacramento, as I mentioned, we saw properties increase nearly 55%. 17% of those properties have had some sort of price cut. Inland Empire is number 2, up 52%. 13.9% of those properties have had some sort of price cut. San Francisco up 32% with regards to inventory. 9.1% of those properties have had a price cut. San Jose up 23%. 10% of the listings have had a price cut. San Diego up 10%. Nearly 12% of those listings have had some sort of price cut. Orange County, LA, inventory's up 5%, and nearly 11% of those properties have had some sort of price cut. So we're definitely seeing more inventory, and we're also seeing more price cuts. Why are we seeing more price cuts? Well, I've talked about, as a real estate agent, pricing property over the last couple of years in different videos. But, I said during the pandemic, pricing a home was one of the hardest things a real estate agent could do because we didn't know where a home would sell. We would price it at what we thought it was worth, and then it would get multiple offers and even go, well above anything we thought it would, just because of the demand out there, the lack of inventory, people just wanting that property for whatever reason, and things were crazy. And so it was very difficult as an agent to price a property. Right now it's a little bit more difficult because it's hard to get sellers on board with regards to where they should price their homes in many cases, because they've heard the stories of their neighbor selling their house with multiple offers going well above the asking price, waiving everything and just closing in a couple of days, home going into escrow the very first day. And sellers have a mindset that their property is better than the neighbor's. And so when their neighbor's home has sold for, say, $1 million, and now me as an agent coming in saying, okay, your neighbor's home sold for $1 million, but that was back in January. It was a different market then. We need to price it at $975 now, just because the market has slowed down a little bit. Affordability is coming into question for buyers out there. The seller says, no, my home is nicer than that property. My home has better views than that property. I want $1.05 million in this case for that property. Prices are sticky to the upside. Sellers don't want to sell a home for less than their neighbor's house did when they think their house is nicer. And so as an agent out there, part of our job is to navigate this and help explain to sellers what the market's doing. But part of the process is figuring out what the market will bear. And so that's why you're starting to see price reductions out there, because some agents are pricing homes too aggressively to start. Some sellers want to price their homes too aggressively to start. And so price reductions are starting to happen across the board. And this is normal. We have price reductions in every market. Even in, during the pandemic when things were going bananas, we still had price reductions. So price reductions aren't an indicator to a market crash. They're just, that's what happens in a normal market. If you don't see people reducing prices, then you don't have serious sellers out there, right? So the sellers have to react to what the market is doing. And that's more of what we're seeing right now. That's why we've seen, if you look at this here from Altos Research, nearly 24% of properties across the nation have had some sort of price cut. So how does that help you as a buyer? In a state like California or anywhere else for that matter? Well, just pay attention to what the market's doing. If you know your comps, if you know the neighborhood that you want to be in, you have an idea of when a property is priced right and when it's not. And you can use that to your advantage to be able to make an offer. But don't go in expecting that you're going to be able to get something substantially less than the asking price. I'm not seeing it out there. In fact, let's take a minute here and talk about boots on the ground. I have buyers in this market. I have listings in this market. Let's talk about both of those. What I can tell you is that the lower price points, those homes under $700,000 in my market. Now, for many of you out there thinking $700,000 is the lower end, thinking we're crazy, I get it. Originally from North Carolina, where my childhood home just sold for under $200,000. But here in California, under $700,000 is actually considered, more affordable housing. And that price point is still moving pretty aggressively. I have a listing in that price point that hasn't, it's been on the market just over a week, but getting quite a few showings and a lot of activity and a lot of calls. So that price point is still, moving along nicely. And I have a buyer that I just wrote an offer on in that price point as well. The property came on the market that day. The buyer called me and said, let's make an offer. We made an offer above the asking price. We actually had to go back and revise our offer because they ended up with multiple offers. So now we're quite a bit above the asking price on this property. And that home's going to sell for, 5% more than where it was originally listed. And it's in that lower end price point. So if you're in that price point, just know things are still aggressive. You still have to come in with a very strong offer. Now, we didn't waive all the contingencies. We didn't waive any contingencies. We just shortened things and tried to make a nice, clean offer. So we'll see how it stands out. But the price points above $1 million, to $1.5 million have a couple listings in that price point that are sitting. They're not getting the activity they were a couple of months back. Why? Well, the market has slowed down for one. Secondly, there's more competition in those neighborhoods now. There's other properties to choose from. We're not the only listing out there. And thirdly, it's because of affordability. As I mentioned earlier in the video, affordability has decreased nearly 40% since the beginning of the year. And so it's way more expensive the higher you move up in prices to be able to afford that property. In some of these price points, we're talking over $2,000 a month with regards to a jump in monthly payment. So that can be a hard hit for many buyers out there. So things are slowing in the market, which is causing inventory to increase. And as I mentioned in the beginning of the video, I think this is going to continue throughout the summer. I think you're going to see those inventory levels continue to rise. Buyer demand is going to slow. And as we get into the fall market, you're going to see more seasonality start to come into play where inventory probably slows down again. Buyer demand probably continues to decrease throughout the end of the year. And we're going to end up with way less sales this year than we did last year, which is what was predicted. But we're not seeing a market collapse. We're seeing the slowdown that we discussed. So if you're a home buyer, just understand what you're getting into, right? As I mentioned, people have very short memories. All they remember is the last couple of years of the craziness. And once the craziness starts to slow, which is what's happening now, they think the world's going to fall apart. No, there was a normal, strong housing market prior to the pandemic that was more of what we're seeing right now with more inventory, with buyers taking longer to make decisions. And that's what we're getting back to. Until you see inventory levels increase substantially, and now maybe you're in a market where inventory levels have increased substantially, but know where they were prior to the pandemic. So you have a gauge, something to compare it to. But if you're in one of those markets, then maybe things are a little bit slower. But here in Southern California, where I'm located, things are still moving very quickly. If you look at this chart here, it shows, where homes are selling relative to the asking price. And you go back to all the way back to July of 2021, homes have sold at or above the asking price all the way up until now. So even with the increase in rates, we're still seeing homes sell at or above the asking price for the most part. So there's no big discounts happening in the market. If you have somebody out there telling you that they're seeing big discounts in the market, ask for proof. Tell them, show me the properties that you're seeing that's selling for way below the asking price. Don't just show me a price cut, because a price cut isn't relative, because that has no bearing on whether it was priced correctly to start with. Show me a home that was listed and is sold for substantially below the asking price, and then show me the comparables that show that home sold for well below that price. I'm telling you, they're not out there. People are using manipulation in order to sell their story, if you will. It's like a media headline. Don't believe it. If you're a buyer out there, just make the right decisions for you. Don't get caught up in all the hoopla. Don't get caught up in what somebody's doing. Don't get caught up in what YouTubers are telling you, to do or not to do. It's not our decision or anybody else's decision. It's your decision. Just make sure you're making the right decisions for you. But if you're here in California and you want to know exactly what's happening with regards to data, do me a favor, check out this video here. I dive into it in more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.